Okay, recording this video after close trade Wednesday, the 11th of January 2012. Not back into my day trading yet, still getting my kind of feet under the desk. So just thought I'd talk about sector rotation just because you can see something kind of setting up on the charts. The strongest sector today was the financials, the Spider XLF. Here you can see it versus the other kind of sectors here. And just want to talk about kind of some sector rotation that's kind of happening. It's been setting up over the last month and a half, really. So just kind of show you that on some charts. Anyway, usual kind of setup with my three kind of time frames, and you can use the better indicators on stocks, on ETFs, all this kind of thing. I prefer it on the indices, things that have kind of decent volume, where it's kind of more kind of professional trading. But let me just show you. So, for example, the setup that I would use would be daily, weekly, monthly charts. This is kind of using the better indicators on Apple. Just kind of clean up the charts here. We've got better momentum here. Put on a better sine wave underneath the monthly chart here, and there's been this just unbelievable move over the last 10 years or so in Apple, but particularly the last year has been extremely strong in Apple. And of course the corollary of that has been shorting the financials over the last year. Just using this setup, you can link all of your charts here using this symbol link between these two. So just by selecting any of these windows and just hitting format, I can go to Citibank, hit the OK button, and there we go. The Citibank numbers kind of ripple through, and you can see Citibank on this weekly chart over the last, since the financial crisis, has had a 95% fall. I mean, I remember when this was a $60 stock and it could never get through 100, and then they had the split and so on. We're down at 31 versus 600, and so this is a 95% fall. But what's interesting is you can see kind of down here we had this kind of extreme exhaustion selling volume kind of down here over last year, kind of mid last year we had exhaustion volume momentum down here, and we've got a pullback to end of trend sequence playing out, and you can see this monthly cross happening on the Citibank chart. And this move is setting up this same type of pattern. You can see this on all of the financials, the major kind of financials at the moment. And if you go to the daily chart, you can see how this kind of move is setting up. So since mid last year, we had exhaustion selling coming down here, pullback to end of trend, and then you can see this bottoming process that's taken several months to complete. You have all these spiked down professional blue bars with flush patterns coming down here. We test again back into the 20s, and we have another exhaustion selling with Rambo patterns. There's the amateurs kind of getting wrong-footed right at the bottom down there, expecting, I forget what the news stories was back then, but 24, 25, the amateurs are thinking this thing's going to zero, and they're shorting down here. And of course, what we're setting up is for a rally. Bullish divergence kind of comes in this last test into the end of the year. Okay, very quiet trading into the Christmas period, into the New Year period, but it's all kind of amateur down bars here, testing here. And as soon as the New Year kind of sets off, everybody, all the professionals have done their kind of sector rotation. They've kind of moved into the financials, and you can see this kind of bottoming process. I mean, there's a head and shoulder type activity here, shoulder, head, shoulder, but you can see it more clearly in terms of the momentum patterns with exhaustion, flush, exhaustion is again bullish divergence, these amateur down bars here, and the move we set up today with a kind of a jumping the creek type of pattern, bursting above resistance here, blue professional bar kind of getting this move going. I don't think it's one of these. This is kind of getting the move going too early. We've tested back down. This for me looks more like, and that was kind of, we broke out above support and then kind of came back to test. This to me looks more like kind of jumping the creek and professional activity, kind of waiting to set this thing off. At some point there will be a point reached where we'll kind of come back and test. So I'm not suggesting this thing's going to go forever. We've still got some resistance up in the 40s, but for the next several weeks I could see us kind of seeing some strength in the financials. And I will go through some of the other financial charts just to show how this kind of pattern repeats. But why is this happening? I believe this is happening because now the spreads on the interest rates is becoming more attractive for the financials. So huge amount of money is made on the spreads between what the financials charge customers versus what they get their funds at, their wholesale kind of funding rates. And if you go to the interest rate charts, so just looking, this is the 30-year interest rate, and I was talking about this towards the last couple of months of last year, just how we were coming up to one of these cyclical support areas on rates. So on the 30 years down just below 3% here. It's been historically an area where we've bounced before. We've got this kind of cyclical support kind of setting up on the monthly chart here. When we go to the 10-year, again on the monthly chart here, we've had this cyclical support kind of come in here. And then when we go to the daily charts of this, you can see again since October this kind of complex bottoming process where we've not been able to get through down below kind of 2.8 type percents on the 30 year. On the 10 years it's down at 1.8. This kind of complex bottoming process here where we put in a lot of activity there trying to test that bottom, and you can see we're coming up on the daily charts to some kind of, again, kind of support level kind of coming in. And then if you go to the bond contracts themselves, so 30-year bonds, again, it's the inverse of those interest rates. So in terms of price kind of topping out here, pull back to dirty end of trend up here, Rambo pattern right at the top there, kind of the amateurs kind of getting wrong-footed there. And we're in this process here where we're finding it difficult to kind of burst on through. We've had exhaustion buying, flush patterns, and you can see the amount of buying that's going on and better momentum is weaker and weaker. And then when we go to, for example, the monthly chart here, it's a pullback to end of trend sequence after exhaustion buying kind of up here. On the weekly chart, you can see we've had exhaustion buying, weaker buying going on, and these highs being tested with amateur up bars kind of in this last move up here. So the fundamental reason why we might have kind of strength in the financials is because interest rates are bottoming, bonds are topping out, and as interest rates move up, the Fed funds rate is going to be kept at near zero. The Fed's told us, Mr. Bernanke has told us he's going to keep it zero, and all of that helps the banks basically kind of recapitalize themselves, plus they'll earn the spread. So as the interest rates for the consumers and the commercial markets kind of go up, their wholesale funding rates get kept essentially at zero, and they earn all of that spread. So that's kind of the fundamental reasons why you might see some kind of strength in earnings in the financials. And of course, the flip side of that is someone like Apple, who's had just this unbelievably stellar strong run up into the 400s, and at some point it's been such a strong move that professionals are going to take profits. On a daily chart here, you can see we've had our exhaustion buying, and we've got divergence patterns here, less and less kind of buying going on. 420, 430s looking like an area where it's finding it difficult to burst through. On a weekly, on a daily chart here, we've got a little end of trend. We just kind of moved on through here on the daily chart. On the monthly chart, we have kind of moved through on this end of trend, but just see that decline in terms of weakening buying activity, bearish divergence patterns. That last move up was an amateur up bar, and on the weekly charts, pull back to end of trend. This last move being led by the amateur yellow up bars here. We've got a cyclical turn kind of coming in there over the next week or two, and less buying kind of going on. So you can see rolling out of these kind of extremely strong moves, things like Apple into things that have been really beaten down, like the Citibank and so on. So let me just roll through on the daily charts some of these. Bank of America was kind of everybody's talking about that, the way that's had a stellar move in terms of percentages. In terms of dollars, it's small, but percentage moves been big. So again, this bottoming process, exhaustion selling, flush patterns, bullish divergence, another flush pattern, more bullish divergence, pull back to end of trend here. This last little push down, amateur down bars at the end of the year, and then here we go, jumping the creek here, blue professional bar going through resistance. We're into a little bit of an uptrend here on Bank of America. Then let's look at Goldman Sachs. Similar type pattern, pull back to end of trend. We've had our exhaustion selling, flush patterns kind of coming in. We test again, more exhaustion selling down here. There's that little Rambo pattern right at the bottom down there at kind of in the 85s. Amateur down bars here, and we've broken through resistance, so we're into a little bit of an uptrend here on the daily chart. So that's Golden JP Morgan. similar type thing, exhaustion selling. You can see these spikes down, and in these spikes down, this is where the professionals are kind of coming in and picking it up, kind of down here, flush, flush, flush going on. Rambo, the amateurs getting wrong-footed right at the bottom there, pullback to end of trend, that little test down, amateur bars kind of testing down, and then we break away as we kind of break above the highs of those amateur down bars, bang, into a little bit of an uptrend here. So, Wells Fargo, same deal. Professional down bars, exhaustion, selling at this point. All these bullish divergence patterns kind of come in here in the mid-20s, can't get lower than that. There are those little Rambo patterns, the poor little amateurs kind of selling short here, bang, takes off to the upside. There are these kind of blue professional bars, and we're breaking the highs of those blue professional bars, so that wasn't kind of selling at that point, that was kind of getting the move going. American Express, again, similar pattern, these spikes down, professional blue bars, exhaustion selling kind of going on here. There are those Rambo patterns again, and that wasn't, that was kind of, the end of November, that wasn't kind of poor, thin markets trading around kind of Christmas and New Year. That was kind of, during the thick of it, if you like, and then kind of coming down here, amateur down bars, bang, just about to set off above 49.50. And you can see when we have these little bullish and bearish divergence patterns right on the zero line here, like that, that's kind of getting ready for a trend move. So my guess would be we'll break above resistance here into a trend move on Amex, Bank of New York Mellon. Again, bottoming process going on. We've had our exhaustion. The professionals picked it up on the down moves here. Professional blue bar down here and down here, kind of getting this move going into an uptrend there. And Morgan Stanley, last one. Bang. Look at all these blue professional bars picking up at the lows down in the teens. Exhaustion selling, flush signals, another exhaustion pattern here with the Rambo patterns there again, testing back down, amateur down bars, and then we take off to the upside. So you can see the same kind of patterns being repeated. When you looked at it on the XLF itself, there we go, it's kind of the combination of all of those together, the exhaustion selling, blue professional bars at the lows, the Rambo patterns, bang, we're setting off there. So you can see that that exact pattern kind of repeated across all of the financials kind of right now. The strongest financials have actually been kind of the Visas, the MasterCards, and so on. So they've kind of had a pretty strong move. I think Meredith Whitney was pretty good on that call about a year ago, or year and a half ago, really, talking about the credit card companies kind of doing well. Less so on the munis. She's been, unfortunately, kind of I just think her call on the munis has been a little bit too early. Just looking at that though on a daily chart, you can see here this is the last year for her. So this is where she was kind of calling the munis to fall, and it's kind of gone the other way. But when you look at it on a there we go, sorry, daily chart here, exhaustion buying kind of going on here. So it's trying to top out. We've not got pullback to end of trend yet on the daily chart, but at some point this market will kind of turn around. So poor Meredith Whitney on that particular call, I think in the fullness of time she'll be right, but it's just the timing of it that's kind of not been on her side this year. But she was good on a year and a half or 2 years ago, kind of calling the Visa and MasterCard type moves. If you look at Visa on a monthly chart, here's the weekly chart. So last couple of years, this thing bottomed at in the 60s and has gone to 100. So it's been a good move there. Anyway, so just talking about some sector rotation type stuff. I mean, so my view is that people are kind of professionals. The smart money is kind of taking profits out of things that have done extremely well, like our Apples, and are moving into things that have been basing basically over the last 4 or 5 months, which have been things like the Citibanks and all the financials of the world's kind of down here. And because of that, if we could see a rally, continuing rally in the stock market, because strength kind of coming into those kind of really kind of downtrodden type stops. I don't have a particular view on the market at the moment. I mean, obviously it's kind of going up. Haven't seen kind of exhaustion buying on my highest time frame tip bar charts, the 40,500 tip bar charts, but just wanted to point out that you can use the better indicators on the equity markets. Make sure that you're using on markets that are kind of not thinly traded, that have kind of decent volumes, professionally traded, and so on. And you can set up your charts again with kind of multiple time frames. Daily, weekly, monthly is what I kind of like looking at for stocks rather than intraday trading on stocks. And this kind of bigger move in terms of the bond market topping out, interest rates bottoming out, move into the financials. Anyway, just some thoughts. Looking forward to tomorrow's trade. Not sure if I'll actually be trading. Still trying to get used to the time zone here. But anyway, hope your trading is going well.